without further ado, we are going to jump right into the show here. Thank you all for being here for the Tuesday edition of the Not Your Average Investor Show. Today, we're going to be talking about how to build your active real estate business. And I'm joined by one of my absolute best friends in real estate. I have Mr. Jeff Rutkowski here. Let me tell you a little bit about Jeff. Jeff is a part of the Fortune Builders team. And there is no stronger connection that I have and JWB has with another team here in real estate, and it goes beyond real estate. Jeff and a lot of the folks at Fortune Builders are really brothers and sisters to us here at JWB, have meant a tremendous amount to us. They were the first people that we ever were mentored by 15, 16 years ago in real estate. And so a lot of the same concepts that Jeff is going to share with you today are a lot of the same concepts that I was blessed to learn when I was starting. So you all are in for an incredible time. Let me brag on Jeff a little bit here. Jeff is not just a pretty face over there. Jeff is one of the most successful and talented real estate investors in his own right, has done hundreds of flips. He owns passive income rental properties in 10 different states, one of those states being Florida. He is, I'm so lucky and happy to call him a JWB client, has been for many, many years. And Jeff is the lead trainer over at Fortune Builders and has spent over 10 years teaching and training students on how to build their active real estate investment business, as well as the passive side. So we are just super humble and happy to have you here, Jeff. Thank you so much for being here, brother.
Dude, like I said a moment ago, man, it's such an honor. So excited to be here, man. And everything you said about us, man, the feeling is 100% mutual for you and the incredible company you guys have built. So let's go. Well,
thank you, brother. This is your first time here on the Not Your Average Investor Show. And if you think we built a wonderful company here at JWB, you're going to love your time here with our community. Our community is just so amazing, genuine, supportive. So to everybody here, let's make sure we make Jeff feel very warm and welcome here. And if for any of you who are watching or listening to the podcast and you're not in our Zoom meeting, you're not here in the audience here, you're missing out. You should be joining us. The next time you listen to our content, our show here, you should join us live. You can interact with all of our amazing community, ask questions to experts like Jeff. To register and join the audience for free, you can go to nyais.com. That's nyais.com for Not Your Average Investor Show. And we will see you here on the next one. Jeff, we have a little bit of a tradition here. It's called the roll call. Are you ready for the roll call?
We'll see. All
right. Before we start the roll call, let's give a big shout out to Pablo. Pablo is the host of our show, and this is the very first vacation he has taken in 2 years, maybe even longer, partly because of how committed he is to this community and this show. So Pablo is out, is celebrating with his wonderful wife, Martha, and we're super excited for him to have just an awesome vacation. And so let's do an incredible roll call in his honor. We're going to start off with Madison, our community manager, incredible marketing teammate here at JWB. She's getting the party started here by saying, welcome to the show. We have John Heading saying, good afternoon, all. We have Andrew Barnhill saying, good afternoon. We have Anthony Ditta. Hello, everybody. Roger Voisinette. Hello, everyone. And support to GC. Thank you so much, Roger. I appreciate it, my man. We have Nadeem Shah says, hello, everybody. Good morning. Nadeem is going to be hosting our in-person Not Your Average Investor Show meetup in Seattle coming up at the end of the month. So if anybody is looking to meet in person, you can definitely reach out to Jen Filson if you want more information on upcoming meetups. We have Dean Curry, who says we promise to be gentle, Greg. I appreciate that, Dean. Marilyn Cotterman, she says, bring it on, GC, make Pablo proud. Jeff, I'm just going to throw this out there. If you get this answer right, I'm going to be so surprised. Do you know what Homosassa, Florida is known for?
Homosassa, Florida. Oh man, that's the place where that's the best hot sauce in the country, isn't it? Is that right?
Close. That's probably the second best reason why we know Homosassa, Florida. We know Homosassa, Florida here in the Not Your Average Investor Show because Marilyn Cotterman is one of our favorite guests to show up each and every week, and she is from Homosassa, and that happens to be the home of the manatees, and we reference that every single show. So little fact, little nugget for you there.
I met a manatee for the first time 6 months ago. Met a manatee, saw one. My father lives in Vero Beach, Florida. Man, those things are so cool, just cruising around in like 4 feet of water.
There you go. Well, if you want to meet more, there you go to Homosassa, Florida. We have Michael Kubota saying, hello, everybody. We've got Chris Gonzaga says, hello, everybody. Lee Bishop says, hello from New York. Lee, what are you doing in New York? You're in Baltimore normally. What's going on? Oh, I know. Lee, Madison wanted to wish you a very, very happy birthday. She wanted to be the one to do it. She's not live on camera right now, so I'm going to wish that everybody in the group. Let's wish Lee Bishop a very happy birthday. We've got, let's see here, Johanna, another member of our marketing team, says, hello, everybody. We've got Shelly Johnson. She said, you got it. Hi from Bradenton. I know she's being supportive. Shelly, thank you so much for being here. We've got Rosalind Riley, returning Rosalind Riley. She is back. She says, good morning, Greg and Jeff from Murrieta, California. We got Eddie Harris from Hot Atlanta. Eddie is here and says hello to all. Chris says, Fortune Builders, the push that most people need to get going. So everybody as a part of the JWB community has no doubt heard of Fortune Builders. You got a lot of loving fans over there, Jeff. It's going to be an awesome show, brother.
Great.
We've got Denny Davies who says real estate, woohoo. He loves him some real estate. We've got Bill Shields who said, Buenos tardes desde Duval. William Shields, Bill Shields coming in hot. Anthony Dida says, for all those who don't know Jeff, he is one of the best instructors and coaches at Fortune Builders. So as I mentioned, man, you got a lot of people rooting for you here. Lee Bishop says, Jeff was a rock star teaching me at Fortune Builders when I saw him in New Orleans. Your reputation precedes you, Jeff. Let's see who else we got here. We've got Ken Moline, who is the patriarch or the first family of the Not Your Average Investor show. And he says the Moline duo is with you, him and his wife, Carolyn. We appreciate you guys being here. And goodness, Noah Randari. Noah, thank you so much for coming week in and week out. Noah's from California. He says good morning to everybody. Man, you guys are just super supportive. Thank you so much. Jen Filson, the fairy godmother of the Not Your Average Investor show. She is checking in. I know she's traveling a lot this week, and she says greetings from the San Francisco airport. Thank you so much for being here, Jen. Greg Stone, howdy from New Jersey. And Rosalind Riley says, shout out to Pablo. More love for Pablo. We all love Pablo. Lee says, rock on, Pablo. Sean Hanna says, good afternoon, all. Stevie B says, hey, hey. Romy Kaura says, hello, everybody. Roger Evans says, always good to be here. And more love for Pablo, which is very, very well deserved. Leonard Lee says, hello from Googletown in Mountain View, California. And boy, man, you guys. Corinne Drabat from Miami. I think that's a new name. Thank you so much for being here, Corinne. And man, you guys are just making this super happy and supportive here. We appreciate all of you. All right. Well, with that, Jeff, that was a hell of a roll call, man. You got a lot of fans out there, brother.
Let's go. I remember Lee. I remember Lee specifically in New Orleans. But yeah, man, there's a lot of familiar faces. That's great.
Well, Jeff, I'm really, really excited to have you here. You know, obviously beyond our friendship and beyond you being a client at JWB, you and the Fortune Builders team are really how I learned to be successful in the active business. And, you know, of course, JWB focuses on the passive side, but if we weren't very good at the active side of the business, we wouldn't be doing good for all of you creating these passive investments. So I think there's just going to be a beautiful kind of opportunity for us to learn how this can work together, right? It doesn't have to be active or passive. It can be both for some investors, or it could be one or the other. Sure. But let's kind of start from the basics, Jeff. Could you tell people what we mean by an active real estate business and maybe define some of the pros and cons of active versus passive?
Yeah, absolutely. I mean, at a very high level, Greg, I think of active income in real estate specifically as wholesaling properties, rehabbing properties, buying, fixing them up, reselling them. Active income could also be defined, for those of you listening, if you're working a full-time job right now or a part-time job, in addition to that. And anything we're kind of doing on a day-to-day basis where we're, I guess, trading time for money. When I train, I always like to use the analogy of, I don't know, I'm sure you love this, Greg, but when I was a kid, I loved Monopoly, favorite board game out there. I play with my daughters once a month now, but I always use the analogy. We all come to a point, we're a point of decision. We decide I want to be a real estate investor. We put our little game piece on go and we start rolling the dice, working our way around the board, getting our marketing out, making some offers on properties, and then bam, we pass go and we close our first wholesale deal or a rehab deal, and then we put some money in the bank, which is great. The only problem with that is once we close the flip or close the wholesale, we have to start all over again, going around the board. But obviously you win Monopoly not by flipping properties, but by stacking up as many of those greenhouses as you possibly can, as quick as you can. So active income, I think of it as anything we're doing to trade our time for money, wholesaling, rehabbing as an investor. And passive income it's truly passive income is kind of like my investments I have with you, where I sent some money to work, and half the time I forget I even have the properties because you guys do such a good job. And it's just that mailbox money, just where, hitting my bank account every month, while I'm here talking to you.
It's a beautiful thing, right? It's a beautiful thing. And to me, I think when I was starting out, the active part of the business was what attracted me to this business model, right? If I go back to my very early days, I was coming from a job that I didn't like, in an environment that I didn't like, and a lack of a team atmosphere. And, the idea of controlling my own destiny and flipping houses was really appealing to me. And then once I started to learn about that, the Fortune Builders team really opened my eyes. So that's one part of the stacking of your wealth, right?
Sure.
And I think most people stop there. Can you talk about how you see active and passive working together, and why it's so important to have both?
Yeah, I mean, to me, they have to go hand in hand. And I really believe, what every real estate investor, whether they know it or not, really what they're after is passive income. When I got started in the business, the TV show, you never see a TV show about, hey, I just picked up a rental and I put in a tenant, it's making me $300 a month and I get all these tax benefits.
Right.
It's always, the knocking down the walls, the flip, because that's better for TV, so I think a lot of new investors, we automatically gravitate in that direction, but really passive income in my mind, is the goal. And the only problem is, to acquire more, passive income properties, we need a stream of active income feeding that. So what we tell our students is, flip a property, buy and hold the property, put aside some of the profits on every deal you do just to keep stacking up those houses. So active feeds the passive all day long.
I love it. I love it. Let's give people just an overview of kind of the pros and cons of each, if you wouldn't mind, right? Maybe take two of the pros of the active side, maybe some of the risks that you really need to watch out for that could get you in trouble.
Yeah, 100%. The active side is, whether you're wholesaling a property or rehabbing a property. I mean, if we're wholesaling, we have a goal, of cashing a check in 30 days or less. That's the goal. Sometimes it's more, sometimes it's less. If you're rehabbing a property, average time, hold time right now, 3 to 4 months. So start to finish, worst case scenario, you're cashing a big check. So that is a pro, right? So you have an infusion of capital coming in, fairly quickly. The downside of it is obviously there's risk. You're having to raise money to do these deals. You're having to hire contractors. You're having to, manage the projects and, things along those lines. And, market can shift on you and things like that. And I mean, those in my mind would be the biggest cons to it. And on the passive side, on the passive side is, to me, the benefits far outweigh the active side personally. Is, one, you have monthly cash flow. Two, you have just tax benefits, for days. You have, not guaranteed, but, highly likely appreciation, over time. And, the list goes on and on. I guess the downsides on the passive side is if you don't have good property management, then, you could run into some problems there. When I started in between New Haven and Bridgeport, Connecticut. And the first home I ever bought actually was a 3-family in Bridgeport, Connecticut. And I'm just like, oh, I'm going to get tenants, I'm going to manage it myself. How hard could it be? And it was a nightmare. And I sold that property and I'm just like, forget this. I'm just flipping houses. And it was years later when I met up with Van Merrill over at Fortune Builders. He was asking how my passive income portfolio, looked. And I'm like, oh, I tried that. I don't do that. I just flip homes. And he looked at me like I had 3 heads. And I told him the story. He's like, hey, there's nothing wrong with rentals. He's just like, there's something wrong with you. You just didn't know how to do it. You didn't know how to do it the right way. And now I do. And I always remember those words.
I think we've all had that moment where Fan looks at you and he's such a gentle soul, but he just calls you out and he looks at you and he's just like, dude, what are you doing? You're better than this. You should be missing this key component. Was it one of those looks that he gave you?
Oh, 100%, man. And it's so good to have someone like him, in my life that could call you out on that stuff, because a lot of times, you don't see.
Value of an incredible mentor there. Well, what you're sharing here is, for you and me, it becomes natural. I think for a lot of our audience, the fact or it is either active or passive. For a lot of folks that are listening on the podcast, it's one or the other. What would you say to somebody who's only focusing on the active side of the business? Maybe they're killing it. Maybe they're doing great. What would you say to them? Sort of like Fan just said to you when you were killing it on the active side and said, you might want to consider this. How would you do that?
Yeah. So if you're only on the active side, I mean, you're just leaving a lot of money on the table, a lot of money on the table. And, as I said, even with, we teach systems at Fortune Builders, obviously. So even on the active side, you can systematize the business, at a pretty high level to where your day-to-day involvement, is diminished. But again, I mean, once you realize that profit, I don't care if you're flipping 100 homes a year, 200 homes a year. Once you finish that last one, you're starting from ground zero again to find, that next deal. And it's just with the way that we can acquire real estate in this country. I mean, all this, Greg, I'm sure your listeners know, but, debt is the biggest accelerator to create wealth, in my opinion, in this country. And it's unique. I was down in Jamaica not too long ago, and I was looking at vacation, but I just looked at a property, and they don't finance their homes down there. There's like one lender on the island, like 17%, 50% loan to value is it. But yeah, you're absolutely leaving a lot of money on the table. And if you're flipping at a high level, that means you're stacking up a large amount of cash. And right now, like with the current climate in our country, the last thing you want is a lot of cash. Yeah. I mean, it's just being devalued, more and more on a daily basis. You got to get it out, got to get it to work for you. So that would definitely be my response to that.
Yeah, absolutely. You mentioned the Jamaica and lack of lending. I remember going on vacation there. I think it was a year or two ago. And I remember driving down the roads and was talking with our tour guide at the time. And I saw a lot of homes that were 20% finished or 50% finished. And you go there and that's just a normal part of life because there's no lending there. It's interesting. Exactly. The difference between being in the States and we probably have times we've had too much lending.
Oh, I know. Yeah, I mean, it's interesting because you'll see like 3-story homes in Jamaica, and you have like a family of 15 living on the first floor. Second floor, third floor is far from being done, but they got to work on it little by little over time.
Yeah, sure. We could all learn a little bit from each other as far as how that goes. But all right. So what I'm understanding here is, right, we've got the active side, we got the passive side. They can work really well together. I love what you said is that most people really want passive income, but you need the active income. And that could be your active real estate business or your day job, but you need that. And for those who are active in the real estate world, it can be an incredibly lucrative, part of a business or your business. But at the end of the day, it's something you have to restart over and over and over again. Exactly. Let's dive a little bit more into what an active real estate investor is challenged with, right? You have taught thousands and thousands. I've been to your conferences where you're teaching thousands of people at one time, right? I know how incredible Fortune Builders is and the mastery program is. You guys probably have more actual knowledge of the pain points of an active investor than anybody else in the country. Talk me through what are the pain points, what are the big challenges that an active investor has, and what are some nuggets that you could give to help those who are going down that path?
100%. Well, it was interesting. We did a survey not too long ago. It was over 100,000 real estate investors across the country, and basically asked them, what is your biggest challenge? Your biggest challenge you're facing in succeeding as a real estate investor. And the number one answer basically was just finding deals. Where there's just their perception was there's not enough motivated sellers out there that will sell their house at a discounted price. And then obviously you hear a lot of chatter about we're in a very competitive market now. So when I do find the deal, there's 10 offers on it, I can't get it type of thing. So really finding deals was the number one answer, and then number two was finding money to do the deals. So it's interesting because, if you got to put a gun to my head and say, Jeff, you could only have a motivated seller or, $1 million cash to go find motivated sellers, which one would you take? And I would take the deal all day long. I don't know about you, because when you find the deal, when you know how to raise the money, the money will come. But that would definitely be, that was the perception. Now, I think there's easy ways to remedy that, through, I mean, obviously I'm a big believer in education, and I'm not, you'll hear me say that a lot, on a lot of the questions you ask me. And that's not just because I work for Fortune Builders as a speaker and trainer, but it's because I invested for 4 years, without education. I went bankrupt in 2007. And, 2007 is when I met the guys and I learned how to do this thing the right way. It was funny. I didn't get invited to any podcasts in 2007. I'm not sure why, but in regards to finding deals, I mean, there's, there are so many systems, and there's so much technology available to real estate investors where you can literally have motivated seller leads delivered to you on a silver platter if you know where to access them. And then raising money. I remember, trying to do my first deal. This was pre-Fortune Builders days, and I was looking to rehab it. And I walked into I think it was a Wells Fargo, and saying, "Hey, I want to rehab this house. I need a couple $100,000." They laughed me out of the bank. I just didn't know. I didn't understand about private lenders and hard money lenders and all these creative way of financing that are available to us. So that's what the average investor says are the two biggest challenges. And I think, through some education, through some systems, they're easily overcome. And then managing contractors is a big one as well. We just had a small group of investors this past weekend, and we spent a lot of time talking about that, how CT Homes is doing it, but that could definitely be a big challenge. But again, it goes back to education, it goes back to systems, in my opinion.
Part of the reason that I love continuing to learn from you guys, and why I would recommend anybody who's interested in going down the active path of real estate to learn from you guys, is because you guys have been incredibly successful, but you continue to do the active business day in, day out, month in, month out. I know you have a significant number of transactions that you're working on right now in San Diego. And that level of mentorship with actual experience in the market today is something that you don't see from a lot of real estate educators out there. And I really have always just had the utmost respect for you guys. Frankly, you have a multi-million-dollar business over there at Fortune Builders. You don't have to do that. You continue to do it so that you can be the best and the best resource for all of your students. Before I go too much farther, I did want to make mention for everybody out there. I totally screwed up and forgot to encourage you guys to put in your questions into the Q&A box. Pablo, again, does a great job of this. There's no way that I can keep up with everything you guys are saying in the chats, because I think Pablo's like from another world. He does it so well. So you guys got to put your questions into the Q&A, and then I'd be happy to ask those to Jeff. So would highly encourage you to do that. One of the questions that just came in here is from Lee Bishop. I think it's more of a comment, but I can really relate to, and I want to just bounce it off of you. You
Sure.
said, Jeff, when you have the deal, the money will come, and that's what I hear. I remember hearing that as a novice and thinking, yeah, but that doesn't really work. That doesn't really apply to me. I remember thinking that before I went to my first Fortune Builders boot camp. Maybe could you tell people, could you give a comparison of what maybe a non-educated real estate investor may look at a deal and feel like that's an objection, finding the money, versus what is a solution? What does that mean in your real experience, where you found a deal and then the money followed?
Yeah, 100%. And obviously, when I say the money comes, it's obviously not going to just fall out of the sky on your doorstep. I mean, there's some steps that we need to take. But the bottom line is that there's a whole different category. When we think financing, when we think lending, to like a novice, thinks they think of the institutional banks, the Wells Fargos, et cetera. But really what I learned when I began educating myself is there's this whole group of asset-based lenders they'll lend based on the power of the deal, not your personal credit or your personal financial statement. So to give you an example, I started investing in real estate in 2004, did well up until 2007, got caught in a bad deal, ended up bankrupt, and joined Fortune Builders after that. And 6 months later, I have my first deal under contract. And this is a home run deal. This is a home run deal, renovate it, just 6-figure profits, ready to go. The only problem was I was bankrupt. I didn't have any credit cards. I didn't have any, cash in the bank and things like that. And I remember Fortune Builders telling me, oh, the money will be there, just get the deal, the money will come. And I just trusted them. So I did. So I'm like, all right, guys, now it's time to put your money where your mouth is, because I got the deal. The money needs to come.
Right.
So they just said, research a couple hard money lenders in the area, and I found a couple, and and I reached out to them, and I was blown away. I had 3 lenders, basically competing to lend me the money. And they were covering roughly about 90% of all the capital needed for the deal. So then you still need that gap funding. You need that 10%. And I actually got a buddy to let me use his credit card and paid him interest on it. So there's always a way to do it. I mean, so we teach about 10 primary ways to raise capital, as a real estate investor. And again, you're looking for asset-based lenders, hard money lenders, private money lenders, creative financing techniques called subject to and owner financing, leveraging other people's lines of credit, leveraging other people's retirement accounts. This is something Paul Esajian taught me. And back in Connecticut, I would do a weekly meeting. I'd get like 20 people, into a conference room, and I would show an example of a rehab I did, and then I financed it with a private lender, and we closed the deal with a private lender. They made 10 grand or whatever they made, and I would say, they did it through their retirement account, and I would teach people how to convert their retirement accounts to lend. And I'd say, hey guys, thank you everybody for your time. And then one by one, hey, can I invest with you? Can I loan money to you? And I don't know, maybe I'll think about it.
Yeah.
But yeah, so there are steps that you need to take, but that's just from my experience. You just get the deal, get some mentorship, and the pieces will fall into place.
So amazing to hear your situation, your real story. I really appreciate the fact that you shared that didn't always go so rosy for you. I didn't know that. And, just for you to be transparent like that, that's kind of what our family here at Not Your Average Investor Show, we've all come to just really value that. So I really, really appreciate you sharing that. And thinking that you went from a really painful moment of being bankrupt because things didn't go your way to a point where you found a deal, and then you found a new asset-based lender, which is probably something you had no clue even existed before. Exactly. And then you had the guts to go and ask your buddy to allow him to borrow, or allow you to borrow his credit to be able to get the necessary down payment. I mean, what on earth was your family thinking for you to watch you go through that progression at that time?
Man, well, yeah. I used to be really embarrassed to share this. Even though I'm successful now, it's just it's not. But it's my story, and so like I said, I started in 2004, and I got into it and did well, and I was flipping and wholesaling properties. But this specific deal, I decided to go build some homes. So I took on 2 partners, and we went out, Greg, to build 2 10,000 square foot colonials, mini mansions. So
not your simple build there.
Yeah, there was 2 lots. They were offering $1 million a piece. We got them for like $780. Then we had to get 2 construction loans for $2 million a piece. And 27 years old, man, and just going for it, and was able to raise like $4 million in 30 days. I was blown away. Like, wow. Back then I don't even know if I would have loaned myself money. And I have people twice my age putting up millions of dollars. I'm like, this is amazing. But I had rehabbed some homes. I'm thinking, building, how hard could it be? But anyways, long story short, is the market started to turn on me around then, and I had some partnership issues, and people were robbing Peter to pay Paul, and I was Peter, unfortunately. So so I ended up $7.2 million in debt with only about $4.5 million in assets. I just built a new home that me and my brand new wife moved into, and we were pregnant, expecting our first daughter. And in a long story short, in a 6-month period, lost everything, lost my primary residence, had to move into the extra bedroom in my dad's house. And it was the most it was the lowest time of my life, honestly, to this point. And I was ashamed. I was embarrassed. I had failed, and I had lost, people, loved ones' money that invested in the deal. And my father was always, hesitant about, he didn't like the idea of me going into real estate in the first place. He was, just a lifer in the corporate world, and
Right.
you work hard, get a good job, save your money, get your retirement. And I just knew that wasn't for me. So, I stepped out and I remember after, failing and having the bankruptcy, he says, all right, now it's time for you to get a real job and, provide for your family the right way. So my family was very, when I thought about going in, because what happened is I sat around for like 6 months feeling sorry for myself. And then a buddy of mine dragged me to a meeting in New Haven, Connecticut at a RIA meeting. And there was a guest speaker that night. And the guest speaker happened to be Than Merrill.
Wow.
And, and I remember sitting there listening, and I'm thinking to myself, first of all, I was thinking, who the heck would name their kid Than? Never heard that name before, but Nathaniel is his real name. I'm like, a fan? What is a fan? But after I got past that, like I'm listening to the systems and how they're doing 100 deals a year. And I'm like, I just remember sitting there and it just like, I remember feeling hope, rise up again. And the only product, they had just started Fortune Builders. It was like most programs, at the time, like 13K to join. And I'm like, I'm going to do this, but I didn't have the money. So I actually went to a guy who, when I went bankrupt on the construction deal, I lost $100,000 of this guy's money. And he loaned me the money to go into the Fortune Builders coaching program after this, because he said, I believe in you, man. And I was able to obviously, pay him back years down the road. And but it was actually my wife. So I had two problems. I didn't have the money for the education. And I just led my wife into bankruptcy and into an extra bedroom at my dad's house. So I got really excited. I'm going to do this. My buddy's going to put up the money. Now I have to sell my wife. And that was, in my mind, the biggest challenge, but I laid it all out there to her. And, and we, she said, we're just going to pray on it, think about it. And I remember the next morning, I get a card from her, and it was, you ever see like the picture? It's like a kitty cat looking in a mirror, but the reflection is a lion.
Yeah.
And she gave me that card, and she's just like, I believe in you. You're called to this, and let's go. Basically, let's go get it, type of thing. And when I got that from my wife, that's all I needed, man. I jumped back in and got the right education, and it's been game over ever since.
Brother, that story is really incredible. What it shows me is just the incredible, support system that most successful people have around them, right? Your wife, even the investor who the deal didn't go the way you wanted on the front end, but he saw what a great person you were, that you're willing to work hard and, assume that at some point you'd get it figured out. And to me, for all of us now, if we're in a position of success, it may look like we have done this on our own or whatnot, but it is all of those people around us and the mentors that we've had along the way. So, and I've had the opportunity to meet your family, and I know how supportive and wonderful they are. So I'm just really, I never knew any of this. That's awesome, buddy.
No, I'm happy to share, man. Like I said, I was embarrassed for many years, but I believe anything you go through in life is never just anything you go through that's tough, and any success you achieve in life, it's never just for yourself. Because whatever failures, if you're listening to this, whatever failures you've gone through, that's a testimony that you could share that could encourage someone else to get through. And then whatever success you achieve, you have an obligation to share it, to bring other people with you. So happy to share.
Likewise. We do put many shows together just talking about all the boneheaded decisions I've made along the way. So it's nice to see that other people have made those as well.
Honestly, man, I get nervous if somebody says they've never made a mistake. I just don't know any successful person that hasn't had bumps along the way.
I love it. Well, good, my friend. We've got a couple of questions here I'm going to get to in just a second, but I wanted to take this conversation, putting our active real estate investor hat on right now and take it into the real world and the real estate market right now.
Yeah.
I would love to get your thoughts on where we are as a real estate market, where you see us going, let's say over the next 12 months, why it's going to go that way, and then relate that to the opportunity on the active side, if you wouldn't mind.
100%, man. And just to take a minute, I like when you talk, I'm honored that you include me, like, CT Homes and Fortune Builders, like it's my company. I have the honor of working for these guys because I believe them. But CT Homes is their residential real estate development company where they flip houses. And a lot of people, like you're alluding to, it's a competitive market, kind of where it's going. 2021 was the most profitable year in CT Homes history. So 123 deals in 1 year in the most competitive market I've ever seen in my lifetime. And not only was it most profitable, but pre-COVID, they were writing about 23 contracts for every one they got under contract. During COVID or during 2021, that ratio decreased to 1 out of every 10 offers. So during the most competitive market, they've been able to have the most, and that's what we teach our students. That's the format that I run my business off of. We just basically copy what they are doing, and they're doing it at an extremely high level. But we believe in the real estate market right now. We're very bullish on buying as many properties right now as fast as you can on the active side and on the passive side. 100%. That's what we're going after. But to me right now, it's kind of like investing on the active side or the passive side with the wind at your back. We have record low inventory. We have 1.8 months right now absorption rate in our country, which is, this, but just for anybody that maybe doesn't, a healthy balanced market is 6 to 7 months of inventory. Right now we have 1.8. This house that I'm sitting in, we just renovated, and in the zip code, there's 1/3 of 1 month inventory in the zip code. So that's simple. That's simple supply and demand. And one thing we're seeing on the active side is, when you go into a deal, you have an estimated ARV, an after repair value. What's it going to be worth 3 months later after you fix it up? And we're having to update that really on a daily basis, just because it's changing. And you never invest based on appreciation, but I was talking with JD yesterday in a flip that, he was banking on, the ARV being, 1.2. 3 months into the project, it's now a 1.5 ARV. Right. So that obviously interest rates are very low, and they're going to tick up a little bit over the next year, but they're still very low. And then just, the money that our government is printing is insane. And just, it's a huge reason why inflation is cranking up, and inflation breaks my heart for, a person on fixed income and, just a typical employee. You don't mind it so much when you own real estate, because obviously prices are going up there, what you could charge in rents and things like that. But, we're printing record levels of money right now. And every time you do that, it devalues the dollar, which keeps inflation rising. So that's, that we're very bullish, man.
A lot of what you just said there are concepts that we teach on every single week here in the Not Your Average Investor Show. You talked about how prices are going up. Well, yeah, supply and demand is guiding that. There's extremely low inventory levels, and it takes a long time to build houses. And that's why you're hearing experts like Jeff, myself, others that we bring on here talking about how 2022 is going to be a year of increased home prices, even though home prices went up 15 to 20% in Jacksonville and other places across the country. Yeah. It's just because it's going to take longer to build houses in 2022 than it did last year, because there is so much building going on, and just not enough resources, not enough labor, materials. Yeah. So you're going to see that. It was interesting. You talked about how your ARV, for those who don't know what an ARV is, that's your after repair value. That's what, as an active real estate investor, you want to know what you're going to be able to sell the asset for. You talked about how that continues to go up, right? You make an offer based on this amount, and then, you go and review that offer. Maybe it didn't come through. A month later, you review that offer and maybe submit it again, and the after repair value is higher. Sure. That really helps all of us as active investors. But I would be really interested to hear how you guys are dealing with rising construction costs, because those are going in lockstep as well. How are you guys handling that?
Yeah, 100%. I mean, it's obviously a big issue. A couple of tips that can help. A lot with that is obviously you have to stay on top of costs. So that's something that you're gonna be updating project to project. Mm-hmm. So we actually we updated our prices about 4 months ago, and then we're in the process of doing it again. One of the things that, if you're doing multiple projects, obviously ordering in bulk can help, but it's not so much the prices. The prices are the issue. It's really the lag time to receive the products. So what we've been doing there is, literally the day we go under contract, we go into escrow is the day everything is getting ordered for that property. So your appliances, your flooring, all of that stuff. So it's definitely you want to be efficient there. On the rental side of things, I know I don't have to worry about my properties with you, but some of my other property managers in other states, whenever we receive notice that a tenant's going to leave in a month or leave in 2 months, we're not waiting for a month we're not waiting for them to get out to go look at what needs to be done. Like I'm sure you're doing. We're scheduling an appointment right away, ordering the materials, so we don't, because if you lose 1 month of rent, 2 months of rent, that's obviously not an ideal situation. So it's not so much the prices. You need to stay on top of the prices and update those, deal to deal if there's a big swing. But it's really just getting that scope of work, knowing exactly what you're going to do to the property, and then pulling the trigger immediately on the orders.
Bring up a good point. We do a lot of new construction homes, and so the timeline and the pricing is something we have to be very cognizant of. If it takes 6 months or even 8 months to build a home, then it's going to be a different equation potentially from a pricing standpoint that way. Just so I understand, CT Homes, you guys are doing mainly renovations, right? Or are there a lot of new construction for what you're doing?
It's probably 8 out of every 10 deals is a renovation, and I'd say 1 out of 10 is a new build, 1 out of 10 is a wholesale.
And that's incredible. And then taking in what you shared about the efficiencies of the business getting better, right? Being able to lock up 1 out of every 10 contracts versus 1 out of every, I think it was 23, right? You're becoming twice as efficient. For us, there's no way that we would have been able to do that on the existing contract side because of all those real estate dynamics, those pressures that are making it more difficult to acquire real estate at the price that you need to. I mean, that's really incredible that you guys are still doing 80% renovations and still being able to acquire that many projects.
Yeah, no, I mean, like I said, it's systems. It's just obviously, years of, making mistakes like we talked about earlier and learning the right way to do it. But we definitely have the wind at our back right now. But let's talk about, well, what if we're completely wrong? What if the market just, tanks, in 3 months, from now? Our position really on the rental side, as if you buy right, if you buy a property for 200,000, that's cash flowing $500 a month, and it drops in value 3 months from now to 150, you're still making the $500 a month. So we're not worried about that. But on the active side, I was actually researching not too long ago, and I discovered the most the market in our country has declined or decreased over a 6-month period. It was actually 7%, and it was in Pennsylvania years ago. So obviously appreciation is ticking up month to month, but when there's a saying in real estate that Greg, is you make your money when you buy, not you realize your profit when you sell. So when we're buying properties, we're buying with a 20 to 25% equity buffer. That's our profit. So and the goal is to be in and out of these projects in 6 months or less. So let's just say something that's never happened before in the history of our country, and the market tanks 10% in 6 months, then we just made a little less profit. But we didn't get hurt. We weren't able, to we're not stuck with the property. So to me, as long as you buy right, you run your numbers right on today. The real estate's not like the stock market where it could be $100 a share today, $10 a share tomorrow. It's always very gradual. So that's why we're confident to do it in this market or any market, quite frankly.
I love that. I mean, that was going to be my next question is, as an active investor, if the next 12 months or 24 months don't pan out, don't go up, right? What kind of risks are we facing? And whenever I'm faced with a question like that, I go through the same mental process you did, which is, what is the worst case scenario? And am I comfortable with those risks? Do I still see the reward potential? And I didn't know that exact fact of the biggest dip being 7% in a 6-month span. But, to me, when I first heard that, I was like, wow, that's not that. I mean, that's not that much, right? Like 7%, right? But then I started to think, well, the point I reference a lot is from 2007 to 2011 in Jacksonville, the market went down 35%. But that's 4 years, right? So call that 10% a year, right? And in 6 months, that's maybe 5% on average, right? So it's really cool for all of us as we're thinking about going and maybe taking a risk, right? Think about the worst case scenario there, find a similar data point, and then see if you're comfortable with the risks. And the other thing you mentioned there, I think this just highlights the value of mentorship, education, right? Relationships in an evolving market, one which will not go up this same way it did last year. It will not do the same thing for years and years. It cannot. It's sustainable. At some point, there's going to be some type of smoothing out / correction at some point, right?
100%.
That's when you are making decisions on investments, you have to have the value of mentorship and relationship and education there. The value is just even more pronounced than times when the market's going up 3, 4, 5%. So going to be a big value for folks out there.
Absolutely.
Well, Jeff, we've got a couple of questions here that I'm going to throw your way, and then we're going to end up the show with a little segment that we do every time. It's called the investment scorecard, where we really want to help everybody who's listening to the show live in the audience or on the podcast understand if the active business is the right route for them. So I'm going to ask you a few things to help us understand the scorecard there. But we've got a couple of questions here. Here's from one of our favorite guests here, Nadeem Shah. He asked if there's a fee to join Fortune Builders.
Oh, yeah, there's many different levels that you could enter in on, from as little as $99 to thousands of dollars, depending on the type of mentorship and the education, that you want. So, I encourage you, fortunebuilders.com. You could, get hooked up there. They could show you everything that is, that is available to you. But also, podcasts like this. Years ago, we do a big event every year, as you know, Real Estate Ignite. And I used to love those events because I get to rub shoulders with people like you and, just kind of hear your thoughts about stuff. But now, podcasts like this, I can just tune in every week and kind of, not have to travel to Vegas to get it. Yeah. So, but yeah, that's a quick answer.
Let's talk about your show as well. I know you launched your show roughly about the same time we launched ours, I believe. So I know we've been swapping notes on how this thing's going. Why don't you share folks a little bit about the show and how they can tune into yours as well?
The show is called the Fortune Builders Real Estate Investing Show. We wanted to go with a very short name. Our mission statement for Fortune Builders is to empower people's purposes through financial education. We believe every person on this earth is created for a specific reason. The reality, though, in our country is most people never realize it because they live paycheck to paycheck. So this is just another way of getting our education out there. And really, the show is modeled after CT Homes. CT Homes is, they've done over 1,600, transactions now, just flips basically. And at any given time, you walk into the office, we have 25 to 40 projects, in some phase of construction. So what I like about the show, it's fresh. I mean, we're in the business, we're doing it every day. We're sharing from things that just happened yesterday, what we're seeing, what adjustments that we're making. So it's fun, so I host it with JD Esajian. JD's the CEO of CT Homes, and we have a pretty good time.
It is a great time. These guys had me on the show. We had a fun time just kicking it, talking a little real estate. And anytime we get to just relive the glory days of our relationship for 15, 16 years now. And I know we're going to be here together doing big things for many, many decades to go. It's always a good time.
Yes, sir.
All right. We got a couple more questions rolling in here. If you have questions for Jeff, make sure you fire them in as our hour is coming to a close here. Roger Evans says, as an individual, how do you obtain the rehab deal? For example, the strategy, when so many investors are going after the same deal?
Yeah, the average investor is, I'd say about 80% of investors in any given real estate market, they're all out there fighting over what we call on-market properties, properties listed on the MLS with a real estate agent. And that's great. It's, that's a good strategy. It's hard to build a business, though, just around that one strategy, just because that's where you encounter the highest level of competition. Because what's great about the MLS is the leads are free. You just access a realtor, access Redfin, you could see them, but the downside is everybody else sees them as well, not just yourself. So my number one piece of advice there would be, get yourself some off-market marketing strategies where you're marketing direct to seller. Yellow letters are tried and true. We run a lot of targeted Facebook ads right now just to distress property list. And that's the key, in our business, we're after distressed properties, whether it's a bankruptcy, whether it's a divorce, whether, and all that information is public records. So we're able, how to access it. You pull the list and then you target them on Facebook, target them with yellow letters, text messaging, whatever. So you want to get some off-market leads in the water.
All right. Last question here. Stevie B asks, how do you personally feel about commercial real estate investing?
Oh, I just personally got my first apartment building. We actually closed at the end of this month, a 36 unit. So
congratulations.
Yeah, thank you. We love commercial, but I've been investing for many, many years as a limited partner with a company called Equity Street Capital. Equity Street Capital is owned by the same three gentlemen that own Fortune Builders, Dan, Paul, and Conrad. And over the last 5 years, they've amassed $1.8 billion in commercial assets. So I've invested a lot of money in their apartment buildings, their retail shopping centers, their office buildings, which, have performed at a high rate of return. So, I mean, really commercial is on fire right now, just like residential. I mean, it really, most areas of commercial, there's obviously many different niches. There's land and industrial and things like that, but we're very bullish on retail, class A retail, many different classes, and then, apartment buildings as well.
Love it, my friend. All right. Well, before we jump into the investment scorecard, I want to do a couple of things. First, I want to recognize Carl Thompson, who's in the audience here. And Carl mentioned in the chat here that he started the process to buy his first JWB home. He had his first call with our team yesterday and just got showered with love and support in the audience here. So I wanted to recognize you, Carl. Thank you so much for starting this process for you. We're really excited, hopefully, to serve you as a client here. So big ups to you, my friend. And then lastly, if you are listening to the show on podcast, I want you to join the live audience. That's where we have dozens and dozens of folks that show up every single week. Literally, friendships are evolving here in the Zoom. You get to ask all of our esteemed guests the questions that you have, and it's all free. So we do the show every Tuesday and Thursday at 12:30 Eastern, the live show, and would love to invite you to do that. You can register for free by going to nyais.com. That's nyais.com for Not Your Average Investor Show. And Jeff, we're gonna end up here. Just let's give everybody just a good understanding if they are thinking about going down the active route. What should they be considering? And what I do is I break down 6 criteria that all investors want. And we're going to pick maybe 1 or 2 and just kind of highlight here what the active, let's say flipping a property, what the benefits or what some of the risks would be. We're going to talk about cash flow, talk about volatility. We're going to talk about upside, liquidity, entry point, and effort is the 6th one. All right. When I think about flipping a house, I think of upside as being huge. And so let's talk about upside. Let's talk about entry point, and let's talk about effort, if you would. What are the upsides that people can actually see if they want to go down the route of active investing?
Yeah, in terms of profits and
relate that to like maybe the passive side, right? I always kind of do the backdrop of like what a rental property investment might be, right? Sure. The active side, your returns on investment are going to be a lot stronger than what you would find on a passive real estate investment, right?
100%. I mean, on the active side, you're able to force appreciation. I guess you could do that on the passive side as well, but you're able to, in a short, compressed period of time, you're able to force appreciation. So just to give you numbers, I mean, we're not interested in a deal out here in Southern California unless it's bringing us, $40,000 to $50,000 profit within a 3 to 4 month period. Typically that's great upside, right? For many people across the country, a couple of those a year, probably making more than you are for your employer.
Do you guys do you have like a minimum return on investment calculation that you see for your capital that you're employing on the active side? I mean, it's probably going to be hundreds and hundreds of % return on investment, right?
Sure. I mean, ultimately, you want to be infinite in your investments where you're doing it all with other people's money. But, a typical ROI, it's actually lower than you might think out here in San Diego, just because the price points, our median price home, it just went up to $810,000 out here in Southern California. So when you look at it through ROI, percentage wise, I mean, typically we're somewhere between 6 and 10%. But again, you got to, we're not so concerned about that. We're concerned of, are we happy with the 40 to 50K coming in per month? And I know some investors that they want 6 figures or they're not doing the deal, so we do a lot of properties per year. So we're okay with smaller amounts, but yeah, that's the mindset there.
Love it. So you're talking about generating $40,000 or $50,000 for every property. And I think you mentioned in a 3 to 6 month time span, right?
Sure. And that's the goal. Obviously, sometimes you make less, sometimes you make more. Right now, we're, in a good way, we typically are making a lot more than we anticipate just because, as we talked about earlier, appreciation just keeps going.
And if you're in a higher price market, your margins, your requirement for your margins should be a lot higher as well, right? If you're in Jacksonville and you're thinking about going into the active space, you're probably not going to get a lot of deals if you want to try to include a $40,000 or $50,000 profit spread on a house that you're going to be selling for $250,000. It's just
exactly.
You won't have many opportunities. You won't have many at bats there. So you're talking about generating a significant amount of capital, much more than you would on the rental property side. Let's talk about entry point. How much capital do you guys need to put in, or what would you say for a typical active investor who's flipping a house? How much do you think that they should really have to be successful?
Well, I think in my story, Greg, when I got started, I literally had nothing, man. I mean, I had $100 to get my first property under contract, and that was it. So the beauty of investing on the active side, and there's ways to do it on the passive side as well, but really on the active side, I mean, if you're doing it right, in our opinion, you're not using a penny of your own money, even if you have it. We don't recommend using it. Your own money, I'd want to put that on passive investments with companies like yours, and get that money, growing for me. But on the active side, with a little bit of education, a little bit of coaching, there's many different ways of 100% financing these deals without having to take money out of your own pocket.
That's a big value to the active side, right? You learn these strategies 100%. And you can do investments without using your own capital. And just to share a personal experience, if you think about how JWB builds 600 homes this year and renovates 1,500 homes, and you've seen some of our downtown acquisitions in the middle of Jacksonville's downtown, right? One of our renovation projects in Jacksonville's downtown is a $20 million renovation. There is no way that the money to do all of these projects is coming from the bank of JWB, right? We have become masters of understanding and structuring smart debt to allow us to be able to capitalize on all of these investment opportunities. So, JWB is a living, breathing example of how to structure your debt in a way where you can maximize your profits, right? Create this lender base. Another way of saying creating a lender base is, right, talking about our private lenders. And many of you have heard us talk about the hundreds of private lenders out there who lend on our project. So trying to pull this full circle, that's what Jeff's talking about here. And when you're on the active side, you can accomplish that with putting very little or zero of your own money into the deal. On the passive side, it's not as easy, right? You got to plan to go in and put typically 20% down, 25% down, unless you get really creative, but that's not usually how folks are successful. At least that's not how we do it here at JWB. And then lastly, effort. You're pounding it on the active side, right? You got to be willing to work hard on the active side. Am I right about that?
Oh yeah, I agree. But it's we love what we do though. Anything in life that you want to do at a high level, you want to succeed, you got to put in the work. You gotta, just laziness just does not get the job done. So we love what we do, so it's easy to put in the work, but work is definitely required. And
amen, brother. Never afraid of hard work. Never afraid of hard work, especially when you're doing it for a purpose, right? You're doing it to build your business. And then if we're wrapping what we talked about in the beginning of the show, if your goals are to build up this passive income stream, you take some of those profits, you put it into the passive side, and slowly you begin to own your own time. You build up this time ownership until that time ownership and that passive wealth gives you the option of whether or not you want to work as hard on the
That's right. That's right.
It's a beautiful thing. All right, my friend, brother, thank you so much for being here, for being a part of this show. I know our entire community really, really appreciated your insight, your transparency, everything that you are and that you represent. It's really fun to have you, man. Thank you so much for being here.
I really appreciate it, man. It's such an honor. And I'll tell you, Greg, I don't know if you need Pablo back, man. I think you crushed it, bro.
I think I blacked out and I'm just here now. I don't know what happened for the last hour. No, but this has been a lot of fun. It's fun just kicking it with an old friend. So I appreciate you. And thank you all for being here on the show. There is nothing that ever gets lost on Pablo and me for you all spending an hour of your day on Tuesday and an hour of your day on Thursday 30, 40, 50, 60 of you continue to be here for the community and for our experts here. So thank you so much for spending that time with us. Want to invite you personally to be there on Thursday for the Thursday rental income property of the week. I'll just do both sides of that since Pablo's not here. We have an incredible property that's going to be available and that we're going to walk through as a teaching moment for all of you. And we have our guest investor, none other than Mr. Lee Bishop, the MVP of the Not Your Average Investor Show community, is going to be our guest investor, helping me break that down, the birthday boy himself. So looking forward to seeing all of you there this Thursday, 2 days from now, 12:30 Eastern. And Jeff, really appreciate you, brother. We'll catch you on the next one. Thank you, everybody.
Thanks, man. Thanks, everyone.